Welcome to our discussion on Texas auto insurance premiums, where things are getting seriously expensive, and we've got a lot
Mm,
to unpack about how Texans can beat these rate hikes.
yeah, it's pretty wild. Texas drivers are now paying like an average of $2,070 for full coverage in 2024 alone, right?
Exactly, a 23% jump in just 1 year. You know, when you think about it, that's a huge burden, especially when you consider that insurance is one of those major monthly expenses after housing.
Yeah, and it doesn't stop there. I've heard the estimates for 2025 are still pretty high in the ballpark of about $2,600 to 2,186. It's like the whole industry is on an upward spiral.
Right, and the reasons behind these increases are actually quite layered. For example, persistent inflation has boosted vehicle parts and labor costs, and modern vehicles, especially ones equipped with ADAS, are super expensive to repair when they're hit.
Absolutely. And add to that the severe weather events in Texas, hailstorms, hurricanes, you name it. And the uptick in claims really pushes those premiums higher. Yep.
And let's not forget about the high number of uninsured drivers. Insurance companies basically shift those risks onto everyone else, so you end up paying more regardless of your driving record.
That's a frustrating catch 22, isn't it? You're on the hook because someone else might not be paying up, and then you're stuck with these price hikes.
Exactly. And there's a bit more to it. The hidden truth behind insurance pricing is that companies use tactics like price optimization, loyalty penalties, and even credit based pricing.
Mm. Oh, for sure. I was always surprised to learn that long term loyal customers can actually end up paying more than newer ones. That loyalty penalty is almost counterintuitive.
Right, you are. And then there's credit based pricing. Insurers in Texas can use your credit score to set your premium, even if your driving is pristine. For some folks with lower credit, it means paying up to 137% more than those with excellent credit.
It's almost like a hidden fee that you don't even see coming until you're reviewing your bill. And it really begs the question, what can drivers do about it?
That's where our strategies come in. Let's start with bundling multiple policies. When you combine your auto insurance with, say, your homeowner's or renter's insurance, you can save an average of
Yeah.
25%.
And even if you're a renter, bundling can bring a cool 10-15% discount on your auto policy, right?
Absolutely. It's like getting a bonus for loyalty, even though the companies might not advertise it too much. Plus, there's an estimated annual saving of about $420 for many Texas families through bundling.
That kind of saving really does add up over time. And speaking of saving, what's our next trick?
Well, next up is smart coverage adjustments. For older vehicles, especially ones under $4,000, maintaining comprehensive and collision coverage might actually cost you more than the car's value over time.
Mm, so, raising your deductible from, say, $500 to $1,000 could lower your premium by around 10 to 15%, correct?
Right. But you got to be sure you can afford that higher out of pocket expense if something happens. It's a bit of a gamble, but for many with older cars, it makes economic sense.
Definitely, though I do wonder, isn't it a bit risky if an accident happens? I mean, isn't there room for debate on whether the long term savings truly outweigh the risk?
I hear you, and it's a valid point. But for drivers with clean records who rarely file claims, the math often works out in their favor. It's a calculated risk, really.
Got it. Now, another big strategy was leveraging discounts you might qualify for, right?
Correct. Think student discounts, which can get you 10-15% off if you maintain a B average or better, or professional discounts for teachers, first responders, and military personnel.
Yeah. And then there's the low mileage discounts if you don't drive too many miles per year. All these little factors can, when stacked, slash your premium by an impressive margin, sometimes up to 20 to 34% combined.
Exactly, plus modern insurance companies offer telematics, which is essentially usage based insurance. You let them track your driving habits through a smartphone app or device. Safe drivers can see discounts from an initial 5% all the way up to even a dramatic 40% off their premium if they consistently drive safely.
I love that concept, rewarding actual safe behavior rather than being lumped together by demographics. And then there's defensive driving courses, which not only boost your skills, but also score you discounts, right?
Yep, defensive driving courses can yield a 5% discount for up to 3 years. You can even complete these courses online for around $25 over 6 hours, making them both accessible and cost effective.
That's kind of a win win. You become a safer driver and pocket some money on your policy. Now, shifting gears a bit, what about the vehicle itself? What role does that play?
Oh, it's huge. The make and model of your car, its safety ratings, repair costs, all of these can dramatically affect your premium. For instance, family sedans and minivans generally cost 10-20% less to insure than sports cars or luxury vehicles.
And then there's horsepower. Every extra 100 horsepower can bump up your premium by about 5%. It's like the faster and flashier the car, the higher the stakes, not just on the road, but on your bill too.
Exactly. And if you're a young driver, there are additional challenges. Staying on your parents' policy instead of going solo can yield a significant discount, often around 40% cheaper than an individual teen policy.
Yeah, those young drivers are hit the hardest otherwise, sometimes quoting up to $6,000 annually on their own. And there's also the away at school discount for college students who don't keep a car on campus.
Right? Plus, good student discounts can drop premiums another 10-15%. It's all about showing insurers that you're responsible both on the road and off.
Now, what about the payment methods? I recall there's some savings to be had there too.
Oh, absolutely. Paying your entire annual premium up front can typically save you 5-10% compared to monthly payments. For instance, on a $2,000 premium, that's like saving $100 to $200 a year. And if you set up automatic electronic payments, you could get an extra 3-5% off.
That's pretty neat. All these little tweaks that add up over time. And then there are the installment fees that add up if you go monthly, sometimes costing you an extra $60 to $120 a year.
Right. It's all about optimizing every little detail. Another major lever is your deductible. By raising it, for example, from $500 to $1,000, you might cut your premium by around 15%, and even more if you push it further. Of course, you need to calculate your break-even point, ensuring you can handle that out-of-pocket cost if a claim arises.
It really is a balancing act between risk and reward. Now let's talk about location. How does where you live affect your rates?
Good question. Your zip code plays a big role because insurers use it to assess risk. Urban areas like downtown Houston or Dallas often see rates about 15% higher than their suburban or rural counterparts due to higher traffic, theft, and accident frequency.
That's interesting. And if you live in a more secure neighborhood with gated communities or private garages, you could get a discount of 5-15% just for that extra security.
Exactly, and that's just one of the locational factors. Another layer is membership discounts through credit unions, alumni associations, and even organizations like Costco or AAA. These can drop your rate by an extra 5 or 15% if you take advantage of those collective bargaining offers.
So many nuances. And I believe building a relationship with your insurance agent is also a highlighted strategy.
Yes, having a dedicated agent can make a major difference. They can review your coverage annually, find hidden discounts, and even help negotiate lower rates by matching competitive quotes from other providers. Essentially, it's about being proactive in your reviews and not being afraid to switch if you're not getting the best deal.
I can see that working well. But what if someone argues that the trust you build with an agent means you shouldn't shop around?
I get that concern. However, loyalty has its limits. If you're getting a better price elsewhere, don't hesitate to share those quotes with your agent. A good agent will always try to beat the external offers while still keeping your coverage robust. It's a respectful balance between loyalty and saving money.
That definitely makes sense. And what about timing your policy changes? I heard there's an optimal window.
Right. Studies suggest shopping around for quotes about 3 to 4 weeks before your policy renewal. This timing generally yields rates that are 10 to 15% lower compared to last-minute quotes. And also try to avoid making changes during or right after severe weather events, since premiums can spike then.
That's a smart move. Timing really does matter. And what about coordinating your insurance shopping with improvements in your credit score?
Exactly. Once you've paid down some debt or fixed errors in your credit report, Waiting a little before seeking new quotes can help ensure you get the best credit-based rates available. It's like a domino effect. Improve your credit, then secure lower insurance premiums.
Wow, there's truly a multi layered approach to saving on auto insurance in Texas. From bundling policies to leveraging discounts, adjusting deductibles, and strategic timing, you can honestly shave off a significant chunk of your premium.
Absolutely. Every little optimization, even if it saves just $50 or $100 a year, can compound over time. Cutting $600 off annually means up to $3,000 saved in 5 years, funds that could be reinvested or just keep your wallet happier.
It's all about taking control, isn't it? Instead of letting the insurance companies dictate your costs with their pricing algorithms, you get the upper hand by being informed and strategic.
Right. And with rates projected to moderate a bit in 2025, these strategies still remain crucial. It's like leveling the playing field, making sure you're not just absorbing costs but actively reducing them.
It really highlights the importance of being proactive with managing personal finances, especially in such an unpredictable market. And, it's also a call for transparency in how these insurance rates are set.
Definitely. Understanding hidden tactics like price optimization and loyalty penalties essentially arms you with the power to challenge those extra charges. It's a win for the consumer.
I suppose the takeaway is clear: weaponize your knowledge. Whether it's by bundling, adjusting coverage, or shopping smart, every little action can lead to significant savings over time.
Yeah, exactly. And remember, it's all about taking immediate steps, request multiple quotes, verify your credit report, ask your agent for all available discounts, and keep an eye on payment methods and deductible choices.
Right? And by doing so, drivers in Texas can, you know, not only counteract those soaring premiums, but actually ensure their quality of life isn't compromised by runaway insurance costs.
Your point is spot on. The approach is multifaceted, and each strategy works together to chip away at those high premiums. It's a layered defense against the rising tide of insurance costs.
Well, this has been a really informative chat. There's so much actionable advice here, and I'm sure our listeners will find ways to take immediate action to save money.
Absolutely. Remember, every dollar saved is a dollar that can be redirected to better things, whether that's investments, savings, or just a more comfortable living. Thanks for joining in on this deep dive.
Thank you, and here's to smarter insurance and happier wallets.